Hey everyone, Rob Folia Properties at Keller Williams Realty here in Nashville. And I'm coming to you today a little bit late for our first of the month market update video here. It's December 8th. My apologies for being a few days delayed. Gosh, I was actually out of town this past weekend running in the St. Jude Memphis Marathon, raised some great money for St. Jude, had a great time in my half marathon as well. They just put on a phenomenal event there. And if you're curious, before I even jump into the market stats here about donating to my St. Jude fundraiser, head over to heroes.stjude.org/runninrob. That's heroes.stjude.org/runninrob. And I should be able to donate right there toward my fundraiser. Have a goal of $4,000 to raise, and we're this close to it. So please help me get to that threshold. But without further ado, let's just jump right in, look at some market statistics, and see what the market's doing here in Middle Tennessee, early December of 2023. So I'm going to continue with what's been the hot button topic really for all of 2023, and that's interest rates. I mean, you can see right here, interest rates are actually, if you look at the recent trend line, have been improving for the last month or so, which is great. When we were recording this video about a month and a half ago, we were talking about rates being in the mid to high sevens. Now they're getting back down into the low sevens. Still high compared to where they've been the last 5 or 10 years. However, that's great improvement. I mean, obviously, a 0.75% decrease in about 45 days. That's fantastic. I'd love to see that continue. Love to see that trend line continue to go down, because while we might be thinking from the short term it's fantastic, look where it was a year ago. A year ago it was in the lower mid sixes, trending downward. It even bottomed out in the beginning of this year, I should say, February, in the very low sixes. Here we are, still a percent higher than where we were at the beginning of this year. 1% of an increase in mortgage rate changes somebody's house payment by 10%. Meaning the same principal and interest payment for, say, a home at $600,000 at 7% would be a $660,000 home at 6%. So a 10% increase in price equals a 1% increase in payment. I hope I'm explaining that right. A 1% increase in rate. I just bring that up because I've seen some of my real estate colleagues posting some things recently about how it's a great time to buy and so on and so forth. And guys, it's not been a bad time to buy ever. And I'm never going to tell you it's a terrible time to buy or it's a great time to buy. The reality is you've got to look at your household budget and look at what your mortgage payment's going to be, whether it's a 7% rate, whether it's a 7.79% rate, whether it's a 6.33% rate, whatever you're getting, you've got to look at what your payment's going to be and decide, hey, can I afford this? Can my household afford this? Because if it can, roll with it. If it can't, and when I say afford it, I don't mean afford it for the next 6 months, hoping to refinance because you think you're catching rates high and getting a good deal on a home. No, think about it. Like, you're not dating that mortgage rate. That is your mortgage rate for 30 years, unless you refinance or sell the home or pay it off, of course. And so you've got to decide, hey, can I afford to marry that mortgage rate for the next 30 years? Because that's worst case scenario. You've got that payment for 30 years. Don't mess around with that. I mean, that's just the reality of it. So if whether rates are 7%, 6%, 2%, 10%, I don't care. Just make sure that you can afford that payment. And if you want to move, move. If you don't want to move, don't move. But that said, what will lowering interest rates, what's that going to do to the market? This time of year, it's not going to do too much. Just because this time of year, historically, you can see inventory always drops October, November, December. It always is. Like right here, I've got months of supply pulled up. You can see it's actually encouraging that our market's kind of normalizing, because we're seeing a typical bell curve for 2023 now as we're finishing things out. How months of supply peaked in the middle of the year and dropped here. That's what we typically should see, as opposed to, say, last year as rates were rising, where it went up, and only went down in December. Here it's been going down all the second half of the year. So that's a good thing. That's what we typically want to see, because we want to see our market stabilize. We want to see things get regular. But that said, these lower rates, if there's not a ton of homes for sale, then what are you going to buy? Right here, I've got just Davidson County statistics pulled up so we can see what's going on. Davidson County in November of 23 finished the month 3,400 homes for sale. That's down almost 20% compared to November of 22. You can see November of 22 right here, 4,200 homes for sale. That's a big difference. So, so not only are there still 20% less homes for sale, but rates are still 1% higher or 0.75% higher than they were 12 months ago. My point of bringing this up is that's not opportunistic times for a home buyer. But that said, it's not a bad time either. And so just bringing that up to say, you just look at your specific circumstance and determine, hey, does it make sense for me to make a move? Does it make sense for me to buy a home at this payment, at this rate? If it does for the long term, roll with it. And if it doesn't, hey, that's okay too. You just got to figure out what makes the most sense for you. Back to statistics though. Again, we've been looking at months of supply. Let's just look at the sales price here. As long as my system will load, we'll pull it up. But I was looking at these numbers a second ago, and let's just see if we can get it to refresh. Nothing like doing a live video on a slow system. Thanks, RealTrax, for the slow system. There we go. We don't want the entire MLS. We do updating this on the fly. We want Davidson County. We want monthly because that allows us to see the monthly changes. All right, so right here, the average sales price for Davidson County, $617,000, almost $618,000, down 0.4%. That's basically even then compared to this time last year. You might be thinking, does that mean there's been no appreciation in the market in 12 months? Kind of, but there's a big reason for that, and that's back to this, mortgage rates. Again, what did I talk about before? How 1% of a change in rates is going to impact somebody's payment by 10%. You might be thinking, if you're a homeowner, well, it doesn't impact my payment. I've got my mortgage or I've got my home paid off. Like, it doesn't impact my payment, but it does impact the person who's going to buy your home. It impacts what their payment's going to be and what they can then in turn to pay for that home, what they can afford to pay for that home, I should say. And so because of that, when interest rates are continuing to rise, which while they've shrunk over the last 45 days, which is a great thing, they're still 0.75%, whatever, 0.7% higher than they were 12 months ago. So because of that, we've seen prices, I should say, stabilize over the last 12 months, just be very flat. That tells me that in reality, because rates have gone up, values have actually kind of appreciated. And the reason I say that is if rates were the same, if instead of this saying on, right here where my mouse is going, if you can see 7.03%, instead of that saying that, if it said the same number as last year, 6.33%, that would tell me that people could afford to pay more than what they're paying right now. And that price would go up then at that point. My reason for bringing that up is, and again, I never want to forecast what the market's going to do next year, because everything, we've seen it in real estate the last 24 months or so, everything is tied to this. Everything's going to be tied to interest rates, and all the experts that are out there that are going to tell you what rates are going to be next year, they don't know anything. They just don't. It's just the reality of it. They don't know if rates are going to be 7% next year, 8%, 3%. They just don't. And so all I can tell you though is if rates stay the same, unless this number right here is going to continue to go up, unless this number right here significantly changes. So what I mean by that is it's that constant weight of supply and demand. So when you've got a market where there's a low supply is down, even if demand is down, it's going to cause prices to just continuously trend slowly upward. Just because there's going to be inflation, there's going to be people who want to buy homes. There are first-time home buyers. There's people getting mortgages right now at 7-8%. It doesn't matter to them because they want to buy a home. They can afford it. So there are still home buyers out there. The reason this number isn't changing though all that much in terms of new listings, the reason why this isn't being driven, the reason why months of supply isn't going up. And again, months of supply is just that balance between how many homes are out there and how many buyers are out there. The reason that's not changing is so many homeowners are saying, hey, I've got my 3% rate, I've got my 4% rate, whatever it is that they're locked into for 30 years. Why give that up? And it's a great question. I mean, as someone who's knock on wood, lucky enough to have one of those low percent interest rates, why would I give that up for my home to buy something new at a higher rate that's gonna, double my mortgage payment or at least make it increase by 50%? It just doesn't make sense. Not when it's an optional move. And so point being, the reality is that we just don't know what the market's going to trend like and be like in 2024. A lot of it's going to depend on this number right here, because I foresee if rates stay the same, just say they're hovering around 7% all of 2024, we're going to see a very similar market to what we've seen this year. Meaning, I would imagine like this 3.6 number, it's going to drop more significantly than it did last year because there's just less people that move this time of year, which is always is the case. And this trend line has been going down faster than it normally does. And so just say there's three months of inventory by the end of the year. That'd be down compared to last year. Say there's even 3.3, it'd be the same. If rates are holding pat, they're holding firm, they're holding strong around 7, there's going to be homes owners, I should say, that just stay the course. They just stay where they are, and I can't fault them. And so because of that, you're not going to see inventory rise. And if rates don't change, you're probably not going to see demand rise or soften much at all either. If rates stay where they've been, demand is going to stay similar, and inventory is probably going to stay similar too. But the wild card again is going to be interest rates, because if rates were to all of a sudden shrink, say all of a sudden, 3 months from now, we're doing a video. It's March 8th instead of December 8th. And we're doing a video, and rates, I'm pulling this up, and instead of saying 7.03%, it says 5.53%. They've gone down 1.5%, which might sound crazy, but just think, in the last 45 days or so, since the end of October through now, they've gone down about 0.75%. So let's just say that trend continues, which I don't think it will. That's a bit extreme of a drop. I would love to see that happen, but just say it does happen. Then all of a sudden you're looking at rates that are 1.5% less than right now. You're looking at homes that are 15% more affordable. Because remember, for every 1% that a rate changes, that changes home affordability by 10%. And if you're curious, if I'm not explaining that well for you, because I know it's tough to convey numbers verbally sometimes, reach out, hit that reply button, leave a comment, PM me wherever you're seeing this. I'll be happy to get into a one-on-one conversation with you and explain what I mean. But my point being, the reason I'm saying this is, let's just say homes are all of a sudden 15% more affordable for the average home buyer. Well, that's not only going to spur more home buyers to want to buy a certain home in a low inventory market, because we still, when you look at just homes for sale, we're still down 20% in terms of the amount of homes for sale. And that's not just a Davidson County issue, by the way, guys. Like, just pulling up Rutherford here, down 20.8%. So, there again, roughly 20% compared to this time last year. It's going to be a low inventory market. Demand is going to seem like it's skyrocketing because of how more affordable homes seem to be. And it's just going to cause the market to get into flux. Now, if you look at 2021, remember 2021 was when interest rates were, when everybody was getting back into the market post-pandemic, rates were still fantastic. And you saw what inventory did here, the amount of homes for sale. It didn't catch up. And then it started to catch up last year. You saw at the beginning of last year, people were saying, hey, let's put our home on the market. Let's go ahead and do this. It started to catch up. Interest rates rose at the end of last year as well. Then all of a sudden, you're looking at a market where kind of everybody's stalling. Everybody's just waiting to see what happens. So again, if rates were to drop, I foresee a market similar to what we saw in 21. Even if rates were to only drop to say 5%, I know it's not a 3% rate like we saw, but there's just such a low amount of inventory out there. It's scarce, that the reality is it's going to be a bidding war. It's going to be that frenzy like we saw in 21. It's just going to be what the market looks like. There's no way around that. If rates were to rise more, it's tough to tell. It's tough to say exactly what the market's going to do, because you see how over the last, we just looked at value, so I don't want to pull that up again. But right here, we've seen rates go up almost 0.75% over 12 months, from the last week available in the 1 year graph to today. It's gone up about 0.75%. If it does the same again, we might see values remain flat. If it goes up more than that, we might see values actually shrink some, because there's less and less buyers out there. It's so tough to tell and speculate. My reason for this ramble, guys, is I know this time of year is a great time to plan for the next year, for 2024. And if you're thinking about making a move, I totally get it. I think you should think about it, and you should crunch the numbers, make sure that it works for your household budget. Whether you're a first-time buyer, whether you're somebody who needs to move because you want to get closer to family, maybe you've outgrown your home and you need to get into something else, like crunch those numbers, see if things make sense. Then hit that reply button, pick up that phone, call me, text me, say, hey, I just want to have a conversation about this. If you know me, I'm not going to pressure you into doing anything. I don't want to, I couldn't live with myself if I'm pressuring somebody into making a move to get a sale. That's just not what I do. I want to help and be the fiduciary and help you. If you choose to make that decision, I want to be here to guide you every step of the way. And yet I'm not here to force you into making a move. That's not my job. That's not how I approach my job anyway. And so just wanted to share all that with you. So if you're curious about moving, if you're not sure what these numbers might look like, just reach out, hit that reply button, shoot me a PM. Happy to help however I can. Guys, until next time, I'm here to help in any way and be of service. No questions too big or too small. Happy to answer them all. Rob Folia, Folia Properties, Keller Williams Realty in Nashville. I'll see y'all next time. Thank you so much.